Hello, my name is Chris Williams with Avabin. You may also know us by Educators Benefit Consultants or EBC, and I am here today to discuss an Internal Revenue Code 125 Flexible Benefits Plan. But before I get into that, we would just like to share this disclaimer page. I'm going to give you some general information today about a 125 Flexible Benefits Plan. But if you have specific questions, each individual situation could be unique. So please consult with your third-party administrator, which is us, or an accountant or a tax attorney if you have any specific questions to a unique situation. So what is a 125 flexible benefits plan? Well, 125 is actually the Internal Revenue Code where the rules fall under, right? And it is the only place that your employer can offer an individual employee a choice between taxable and tax-free benefits. Now, you probably have other benefits outside of a 125 plan, but you don't have choice. That's the big thing. This is the only place that certain benefits are eligible for you as the employee to determine if you want to participate and how much money you want to participate. How do you do that? Well, you do that during your open enrollment period, right? You make the elections before the plan year starts, and then you can use that money during the plan year for any eligible expenses that you incur during that time frame. And then that money that you contribute is actually reclassified as tax-free money, so it's completely tax-free. So like I said, you can only enroll during open enrollment period unless you have a change event. So I'll go over change events here in a little bit, but the only time you can make a change to your election is during open enrollment. And for flex plans, you enroll each year. The money you elect during the open enrollment period will be used to reimburse eligible expenses incurred during the plan year. So some of the voluntary categories that are available through a 125 flexible benefits plan include a full use medical FSA, which pays for out-of-pocket expenses that are not paid by your health insurance or any other type of consumer-driven health care. Limited use health FSA is for vision and dental expenses only, and you'll be using that category if you're contributing in the next category, which is a health savings account. Health savings account, dependent care flexible spending account, or DCAP is what they're called, for eligible daycare expenses, and then also outside health insurance FSA, which is only eligible for supplemental insurance premiums. So I'll go into more detail here in a little while about each one of these categories, but it's important to know which one of these are available to you through your employer. The employer will typically offer all or a few of these to you as the employee. So make sure you understand which categories are available to you. So before I get into the more detail about the individual categories, I first want to show why we want to participate in this 125 flexible spending arrangement. As you can see, I have two individuals here, and this is Jill, or Jill flexes and Bill does not flex. They each make $30,000 a year, and they each have the same daycare, medical, and outside health expenses throughout the year. But because Jill planned and flexed for her daycare expenses, her medical expenses, and her supplemental premiums, she was actually able to decrease her taxable income down to $19,300. As you see, Bill did not plan, he did not flex during open enrollment, so he will be taxed on all $30,000 that he will make that year. So after taxes and Bill paying those same expenses, you can see that Jill take-home pay increased a little over $3,000. So it is definitely worth the time and effort to sit down and plan how much you want to flex into these categories and save on taxes. But like I said, this is a hypothetical example, and it may not properly reflect your tax situation. Obviously, not everyone makes $30,000. So if you make more, you're probably paying more taxes, which actually could turn into more savings, right? So the funds in your Internal Revenue Code 125 plan can be used for qualified or eligible qualified expenses for you, your legal spouse, or your dependents, your legal dependents. So what is a legal dependent? Well, it's Internal Revenue Code 5152 and 105B. But essentially, I think it's on the next slide, is that the definition of a dependent is they cannot turn age 27 during that tax year to be considered eligible dependent. So they could be 26 up to age 26 as long as they don't turn 27 that tax year and be considered dependent. So you could get reimbursed for them if they're still dependent under you. It doesn't matter if they're married or if they're a student. Like some health insurance matters if they're a student up to age 25 or whatever the rule is with health insurance. So now I'm going to jump into the categories, a little more detail. Full use medical FSA is for pre-tax dollars, may be used to pay for unreimbursed medical expenses. Now, obviously, this is medical expenses that are not covered by your insurance or by a health savings account or by any other form of consumer-driven healthcare. Some examples of this is medical or dental plan deductibles and copays, anything you're paying out of pocket for your doctor visits, eye exams, contact lenses and eyeglasses, hearing aids, including the batteries for hearing aids. As we know, hearing aids are not cheap. If you have to have one, it's a good way to pay for it, at least with tax-free money. Prescription drugs and medications, orthodontia, medical supplies, including contact lens solution, peroxide, splints, and other things. And also one that most people might not know about is medical mileage. And it was 18 cents for 2020, and I think it is actually decreasing a penny for 2021. But if you want to know the exact number, it's we can let you know, or you can find out by a simple Google search. But you can actually get reimbursed for every mile you drive to and from the doctor's office, the dentist's office, whatever medical place you are going to. Now, if you detour and go somewhere else for dinner or something like that, you cannot include those miles, but you can always submit a Google Earth report saying I drove from my home to the doctor's office and back, and that is 40 miles, so please reimburse me 18 cents per mile. Very good, probably not used as much as it probably should be, so I always like to point that out. Limited use health FSA. So this is similar to the full use health FSA, except you cannot get reimbursed for medical expenses. So why would you do this when the full use is there? Well, because this one, the limited use health FSA, is the only one you can participate in if you are funding a health savings account or an HSA. You cannot fund the full use medical FSA if you are contributing to a health savings account. You can use the money that's in the limited purpose or limited use health FSA for vision and dental out-of-pocket expenses. So once again, if you're funding a health savings account, but you know you have some dental procedures coming up, you can usually get an explanation of cost and find out how much that's going to cost you out of pocket. And you can actually get reimbursed for your limited or through the limited use health FSA up to the limit. So now how do we determine what is an eligible expense? Well, the IRS has three types of expenses. They have primarily medical, primarily personal, and a dual purpose expense, right? Primarily medical is going to be an expense that is always going to be eligible because it is for a medical purpose. Band-Aids is a good example of this. You're not going to use Band-Aids as tape or it's some type of adhesive other than to cover a wound or something like that, right? Primary personal are never going to be accepted eligible expenses because they are, as they say, for personal expenses or personal needs. And believe it or not, toothpaste is actually considered a cosmetic item. Another good example would be tooth whitening kits, stuff like that. Obviously, those are for cosmetic purposes and will not be eligible items or eligible expenses. And then there's the dual purpose, which could be a medical expense or it could be a personal expense. And a couple examples with that is varicose veins treatment. There very well might be a medical need for you to have those varicose veins treated. So you would have a letter of medical necessity filled out, and that would be an eligible expense. However, if I just want to go get my varicose veins cleaned up before I go to Mexico on the beach, that would not be an eligible item because it was for personal reasons and not a medical reason. So we also received some great news in 2020, believe it or not. Back in June, the IRS released Notice 2020-29, which, among other things, stated that over-the-counter medications no longer need a prescription or a letter of medical necessity. In the past, if you wanted to get reimbursed for Tylenol or allergy medicine, you had to have a letter of medical necessity, which would basically say this person is buying Tylenol for migraines, or this person is buying allergy medication because they have bad allergies. That is no longer the case. Those items are now eligible expenses. And also in this notice was feminine products are now eligible expenses as well. So tampons, pads, panty liners, stuff like that are eligible expenses. If you have any questions about eligible expenses, hang on a second. I'll show you a great place to check. But also, if you have those dual purpose items, like the varicose veins treatment that I had, or I explained on the previous slide, then you can still submit a letter of medical necessity, and that will suffice and make it an eligible expense. And like I said, if you have any questions about what is an eligible expense, is this thing eligible, please go to our website, www.avabin.com. And in the middle, there is, I believe it says FSA HRA store now, but you can click on that and you can view all FSA eligibility list. And I believe there's also items out there that you can purchase that are always eligible items. Also, we have launched a new platform for our Flex record keeping system, and we are happy to announce that everybody that enrolls in the full use medical FSA or a limited purpose medical FSA will automatically get a prepaid benefits card. These cards are great because you don't have to wait to be reimbursed, so you don't have to pay out of pocket. It pays at the point of sale. Typically, you won't have to submit a receipt depending on what type of merchant you are using. However, we always recommend that you just keep your receipts in case we need to follow up with, we need you to send in a receipt. So always keep a receipt if you are using the prepaid benefits card. So where can the card be used? Well, the IRS defines two types of stores or merchants that the card can be used at. And it really just depends what system that store has. So the inventory information system, inventory information approval system, or IIAS, or a merchant category code, MCC. I'm going to talk about I'm going to talk about these in more detail here in 1 second. So the Inventory Information Approval System, or IIAS, is going to be your bigger box stores. Eligible expenses are deducted from the account balance at the point of sale, and then transactions are actually fully substantiated on this, meaning that we will not need a receipt. But unless you are 100% sure that this is an IIAS system, please keep the receipts just in case paper follow-up would be needed. So how does it work? Well, let's say Chris is shopping at Target, and I go and fill a prescription that I have with Target. I also pick up some Tylenol, some other eligible items. But then I decide to do some grocery shopping, or pick up a book to read, or something like that. I take all my items to the cashier. The cashier obviously rings them all in, and then they ask for a form of payment. Well, first I'm going to swipe my benefit card, and anything that is an eligible item will come off of the bill as long as there's funds in your account. Then the cashier will ask for another form of payment to pay for those items that are not eligible expenses. Like I said, though, you will not need to send in a receipt to Avabin. However, we always recommend you keep a receipt in case paper follow-up is needed. You can also use the card at what's called an MCC, or Merchant Category Code inventory system. Now, this is going to be your physicians, your dentists, your daycare offices, your hospitals, your pharmacies. Not all of physicians, dentists use this type of system. Some just use their own system and the card won't be accepted. But if one of them has this system, we can get them added. If they're not added, they should be added already. These stores must meet the 90% rule, which means that 90% of their sales are for eligible medical expenses. So if they don't meet that rule, they cannot be an MCC provider. We see that a lot with like hospital, and they might have a separate, pharmacy / florist where they're selling floral items, and that's more than 10% of their sales. So they cannot qualify as an MCC. So card's very beneficial. It comes to you at no additional cost. It comes to you automatically if you're enrolled in the full use medical FSA or the limited purpose FSA. Like I said, we have to achieve 100% IRS compliance when a receipt is required. So this means if there is a situation where you use the card and a paper follow-up is needed, we will send you a letter or an email or an email requesting the receipt. If we do not get the receipt back, then the card would be suspended. I think it's after 90 days. So if you do not get the card, if your card is not working, it's either one of two things: you're out of money, or you have a receipt that's outstanding by more than 90 days. So in order to get it turned back on, we would need to receive the receipt, or if you used it for a non-eligible item, the repayment would need to be submitted and added back to your account. The card would be reinstated upon receiving the receipt and the adjudication and everything like that. You will receive 2 cards, like I said, if you were in the Med FSA or the Limited FSA. And the cards will be fully loaded with your elections at the beginning of the plan year. So if you elected $2,000 in the full use medical FSA and your plan starts on January 1st, then on January 1st, your card will have $2,000 on it to use. I don't expect you to know what system they are using, but if you want to visit this website, www.sig-is.org, there is a list of all the IIAS merchants and all the MCC merchants. So you can look and see what is in your area, which ones I can use the card at, all that fun stuff. The next thing I'm going to talk about is a health savings account. So a health savings account is only available if you are enrolled in a qualified high deductible health plan. If you are in a high deductible health plan, you can contribute to a health savings account as long as you meet other criteria. So pre-tax deductions are sent to your HSA custodian. Unlike the other flex categories, you can change your election amount at least monthly. There's no change event required to change your health savings account amount. And there's no use it or lose it feature, right? So the money in your HSA can be carried over from year to year. However, the employee is responsible for keeping receipts in case of audit. You need to make sure you keep your receipts anytime you spend or get reimbursed money with an HSA, because there's not a third-party administrator or the employer adjudicating the claims to make sure that they're eligible expenses. So like I said, don't send them to Avabin, because we do not adjudicate your HSA claims, because HSA claims do not need adjudicated. They're always on the employee. And it's not to be confused with an HRA or a health reimbursement arrangement. They are separate things. So just a couple things additionally that you cannot contribute to an HSA if you or your spouse currently have a full use medical FSA. So if you are currently have money in a full use medical FSA that you can use, you cannot contribute to an HSA. Your employee or spouse, you the employee or your spouse is currently making claims from an HRA. Now, if you have HRA money and you can make claims from it, typically the plans will allow you to suspend access to your HRA or health reimbursement arrangement money, but that does not necessarily the case in all situations. So if you're in a situation where you have money that you can use in an HRA, or your spouse has money that you can use in an HRA, you can ask your plan administrator or third-party administrator if you can suspend it for a year at a time. And if that is the case, you can. You can't access that money for the year, but you can contribute to a health savings account and use your HSA money in that year. If you're claimed as a dependent on another person's tax return, you cannot contribute to a health savings account. Or if you're currently on Medicare, you cannot contribute to health savings account. And once again, you have to be enrolled in a high deductible health plan to contribute to a health savings account. So the limits did increase slightly in 2021. If you are on a single high deductible health plan, which means the high deductible health plan only covers you, then you can contribute $3,600 in 2021. If you are in a family high deductible health plan, then you can contribute up to $7,200 as a family. And at age 55, you can contribute an additional $1,000 annually. So if you fall in that range, and you're on a single plan, you can do $4,600, or if you're on a family high deductible health plan, you can do $8,200. The next voluntary category you can elect into is called Dependent Care FSA, or DCAP. It is for eligible daycare expenses for dependents under the age of 13, or care for a dependent who is physically or mentally incapable of caring for self. So if you have dependents under that age and you are paying for expenses, this is a great category for you to flex money into and use tax-free money, get reimbursed with tax-free money. One caveat with educators is that you can only get reimbursed for daycare expenses when you're gainfully employed or while you are looking for employment. So if you are not gainfully employed or not looking for employment and you have daycare expenses, they would not technically be eligible expenses. So some of the places you can use the money at include home daycare or child daycare centers, preschool, nursery schools, day camps, and probably a bigger one for educators is the hold your spot fee. So that's like if you have your dependents in daycare, but over the summer you're not working, So they're at home with you. You typically have to pay what's called a hold your spot fee in order to keep their spot when you return to school or return to work. Um, Overnight camp is not eligible, and kindergarten tuition is not eligible. So you send them off to a weekly camp where they're staying overnight. That is not an eligible expense. And then once again, you may flex for daycare if your child is age 12 or younger. Just another way of saying under the age of 13. The next, and I believe final category that we're going to talk about today is outside health insurance flexible spending arrangement. And this is actually a category that's probably not used quite as often as it was in the past. Since the passing of the Affordable Care Act, eligible expenses within this category has shrunk dramatically. In the past, you used to be able to go out and get an individual health insurance policy and get reimbursed through this with tax-free money, but that is no longer the case since 2014 with the passing of the Affordable Care Act. Some eligible premiums through this category are cancer policy premiums, accidental death and dismemberment, specific illness policies, vision policy premiums, dental policy premiums, and the last bullet point there is that the premiums must be paid with after-tax money to be eligible for reimbursement. Cannot double dip. So if you're paying for, let's say, your dental policy premiums through payroll deduction, pre-tax, you cannot get reimbursed for them because you're not paying taxes on that premium anyways. So if you have any of these specific policies that you're paying for out of pocket with after-tax money, outside health insurance, you can flex for those premium costs and get reimbursed with tax-free money. So if you are paying for some of these policies, definitely worth looking at and participating in. Speaking of the Affordable Care Act, you may not use your 125 plan funds in any category to purchase insurance on a public exchange, federal or state run. So in Minnesota, this is MNsure, MNSURE. And if you are currently purchasing an individual policy on the MNsure or through any other public or state-run exchange, you cannot use the money in your flexible spending account to get reimbursed for those expenses. So like I said a little bit earlier, there is a use it or lose it feature with the flex plans or the 125 cafeteria plans. This does not include the health savings account, just to recap. So your other voluntary categories, not including the health savings account. Like I said, you make the election prior to the beginning of the plan year during your open enrollment. So we always advise to conservatively estimate your expenses, because if you do not use the money by the end of the plan year or the end of the grace period, if your plan has a grace period, then you are at risk of losing that money. You make a separate election for each category, and you can't move money between the categories either. So if you're doing dependent care and full use medical flexible spending account, you can't move it between the two because you used up one of the categories already. So that's why we always say conservatively estimate your expenses for the year and then put the money into it. So if you know you spend $500 on contact lenses throughout the year, well, you know you're going to have that expense. So it'd definitely be worth at least flexing $500 to pay for those contact lenses with tax-free money. You know how much your daycare is going to cost for the year. Probably flex how much your daycare is going to cost, so you can pay for that with tax-free money. You will receive a reminder from AVABIN 90 days before the end of the plan year to use up your money. So if you have money left in your Med FSA, you can always go out to the FSA store and use it on, Tylenol, feminine products, any of these over-the-counter items now, or anything else that's eligible medical expense. So like I said earlier too, your elections are irrevocable, meaning you cannot change them unless you have a change event. So once again, this does not include the health savings account, but this does include all the other voluntary categories within a 125 flex plan. And a change event is marriage or divorce, birth, adoption, or death of a dependent, termination of employment, or change in employment status. However, it has to impact your eligibility. So you have to either go from benefits eligible to not benefits eligible, or vice versa. If you have any of those, you can make a change. You have 30 days from the date of the change event to make that change and submit your form to change your election. There's also another change event for the dependent care DCAP or the outside health insurance FSA. And that is a change in price or cost, or a change in cost or coverage. So if you have daycare expenses and halfway through the year your cost increase, you can increase your contribution to your dependent care, or vice versa. It has to go in the order of the change or the direction of the change. If you have a cancer policy and are using the outside health insurance FSA to reimburse for premiums, and your premiums decrease in August, we'll say, you can decrease your election into the outside health insurance FSA. But that is only for the dependent care, a change in cost or coverage, or the outside health insurance. And like I said, they have to go in the same direction of the change. So your price can't increase and you decrease your election. And once again, you have 30 days from the change event to make the change. You can do that by submitting your change in status form, and it must be signed and completed within 30 days of the event. So if you have event or know one of these events are coming up, please notify us. We'll provide you with the proper documentation to notate it, and we will go from there, and you will be able to change your elections. I know we've talked about some rules and what we have to do to get this tax-free money. I'd just like to point out that these are not AVABEN rules. These are Internal Revenue Code rules and regulations that we must abide by. Like, the government does not give tax-free money for many situations, and when they do, there are these rules that we need to follow in order to receive that tax-free money. Limits for the 125 flexible benefits plan for the DCAP or dependent care is you can contribute up to $5,000 if you are single or if you're married and file joint tax returns. If you are married and file separately, you can do $2,500 as the employee, and if your spouse has dependent care FSA available to them, they can do $2,500 as well. And then the medical FSA, and that's the limited or the full use med FSA, you can do up to $2,750 per participant. And like I said, this is not household. So this, if your spouse has a FSA available to them through their work, they could also do $2,750. How can you submit claims? Well, you have several options now, and even a new option now with the new platform. But you can submit by US mail, you can submit by the website or the web claim section, you can fax in claims, you can use our new mobile app to submit claims. So you have 4 different ways you can send them to us to get reimbursed for any eligible expenses. You do not have to do not email us AVABEN representatives claim information because of HIPAA privacy rules. We do not want to receive those via email. We want to make sure that they're safe and your information secure. So please use one of these 4 options to submit your claims. Then always keep your original receipt and send us a copy, just in case, especially if you're mailing or doing something like that, because if you mail it in, make a copy of it, keep your original just in case it gets lost in the mail or something like that. So filing claims, if you are going to fax or mail, you're going to fill out the claim form, paper claim form. The receipt is required. It needs to have a date of service, what type of service it is, and the cost of service on it. If it has those three things, it's an eligible receipt. Um, like I said, you can fill out that claim form, include the receipt, and either mail it or fax it to us. The web portal submission is basically using our website to submit your claim. And you can scan your receipt or take a photo of your receipt and upload it to your computer. And then you upload it to our cloud-based system and submit your claim that way. Now with the mobile app, you can also submit it through the mobile app by taking a picture with your smartphone and uploading the claim through your mobile app. Now, one thing with the mobile app, once you download it, if you haven't created your account or logged into your account on the web portal, you will need to go out and do that. So that's where you get your username and password from, is the registration. I'll go over that here in a little while. But if you're having trouble getting logged into the mobile app, that is the reason. You need to go out to the web portal and create your username and password. And then one other thing is that canceled checks are not considered a receipt. We still receive some canceled checks from time to time with people saying, I need reimbursed for this amount, and all they send us is a canceled check. That is not an eligible receipt in the eyes of the IRS. So please don't send canceled checks. Like I said earlier, the Med FSA categories, so the full use FSA or the limited use FSA, you can get reimbursed up to your election amount on the first day of the plan year. So if you elect $2,000 into your Med FSA and you have an expense on January 6th for $2,000, obviously you haven't contributed $2,000 yet, but you can still get reimbursed for that money. So that is a nice little feature with the Med FSA and the limited FSA. However, with the other categories, dependent care, HSA, or outside health insurance, you can only get reimbursed up to what you have contributed to those accounts throughout the year. Now, if you have an expense for $1,000 for daycare and you've only contributed $500, you can submit it and get reimbursed for the $500 that's in your account, and then resubmit it for the additional $500 once that $500 has reached your account. Some additional features that your plan may or may not have include a grace period. If your plan has this, you have an additional 2.5 months to incur eligible expenses after the plan year ends. So instead of having January 1st to December 31st to incur the expenses, you'd actually have until the middle of March of the following year to incur the expenses. So if your plan has it, you have an additional 2.5 months to incur eligible expenses. Now, there are also a couple plans that have a carryover limit, and that means that you can carry over up to $550 into the Med FSA or limited purpose FSA. So if you don't use all that money within the plan year, that can be carried over up to $550. But like I said, please check with your individual plan to see if your plan has either of these features. Then most plans have some form of run out period, which is you have up to 6 months after your plan year or grace period ends to submit your expenses for reimbursement. So basically you have to submit your receipts within 6 months or shorter in some plans. So make sure you are aware of how your plan is run. So talked a little bit about the mobile app. I just wanted to quickly show you a screenshot of what it looks like and go over some of the features of it. But you can check your balance and account details. You can view some charts that summarize your account information. There's some links to external web page to obtain helpful information. So if you're looking for eligible expenses, stuff like that. You can submit your claims for medical dependent care FSA. And then you can also snap a photo of your receipt, which makes it really easy. Everyone has a phone nowadays. Take a picture of your receipt and submit it that way. You can even do it as you're leaving the store. and then you would just add it to your claim submission, or if you already submitted a claim or filled out a claim submission but didn't have the receipt scanned, you could add it to that as well. You can also report your card lost or stolen through the mobile app. And then one other feature I think is the coolest thing about the mobile app is this barcode scanner. You can actually, if you're out shopping and wondering if an item is eligible for reimbursement through your MedFSA, you can scan it and it'll tell you. So you just pull up the mobile app, click on the scanner and scan the barcode, and it'll say eligible or not eligible. Mobile app is available today, so go out there and download it. But like I said, if you haven't created your account or gone through your open enrollment yet, once you create your account, you'll be able to log into the mobile app. And it is available through the Apple App Store or the Google Play Store. So last thing here is I'm going to go through open enrollment and the steps that you will take to do that. You will receive an enrollment code from your employer along with additional materials. Now, everyone will have to go out there in 2020, 2021 for this plan year to create your account. With the new platform, we did not transfer over username and passwords because they are protected. So you'll have to go out there by going to avabin.com. And then you're going to click on the employer portal here, employer portal. I'm sorry, consumer, you're not an employer. So you'll click on the consumer portal. Terms and privacy policies jump up, and then click here to continue to the consumer portal. And if you already have an account created, which it's your first time, you will not have one. You don't have to put in your username or password. You'll actually just put in your code that your employer sends you right here. And once it's usually like ESN-MED125 or something like that. And then if you click get started, next is going to pop up a page for you to enter your personal information. And being as that I am not an employee at that employer, I will not fill it out myself. But once you fill in this, you'll create your username and password and confirm your password, and then hit next. Now, when you hit next, you'll be able to enroll if your open enrollment is open. So if your open enrollment's open, you can enroll on the spot at that time. And we are happy to help if you have any issues with the new platform or the new way of enrolling. And then that is it. So I hope this was at least a little bit beneficial to you. We're happy to help with any questions you may have about your plan specifically. You can email us at claimsupport@avabin.com or contact your plan administrator or employer. So I hope, like I said, I hope this was at least a little bit beneficial. And if you have any questions, please let us know. Thank you for your time.